as Tesla stock on Friday fell 3.5% in regular trading, down another 1%, about 1.14% in after hours. Is this a good time to buy Tesla, or are we going to fall even more? Here in this video, I will go over all of your news today for Tesla, what Wall Street seems to be ignoring for Tesla stock, and the reason why I think today is a better price to buy than we've seen in a long time, and why actually taking advantage of this could be, well, the best thing for most people. Obviously, I'm not a financial advisor, I'm not a financial planner. I am here to point out what sometimes is hard to see, and that is the opportunity in Tesla stock right now. Keep in mind, I have a $900 price target on Tesla by the end of this year, so that may prove to be delusional if, well, Tesla fails this year, if we don't get robotaxi, if we don't get cheaper, lower priced Teslas, if we don't get FSD in the Chinese or European markets, then that could be totally delusional. Or in the event we do get those things that happen and interest rates come down and Elon's Doge is effective in bringing down wasteful government spending, as it already appears it is, and that subsequently brings down inflation, well, $900 per share is a very obtainable price target for Tesla by the end of this year. Let me know your thoughts on that down below in the comment section. And one thing that I have noticed in recent days is there's a lot of people that are now bearish on Tesla. People say I change my mind all the time, but from what I see, the broader sentiment in Tesla flip-flops in a 2-hour period. 1 second people are bullish, can't get enough of the stock, excited for the stock long term. The next day, they're nervous and scared and selling and trying to time their entries, their exits, and their buys. Here in this video, I'll set things straight. We'll also look at next week and the major events that will decide Tesla's fate, because we have CPI, and that is especially important for Tesla. And the big thing that everyone's going to be waiting and watching for coming next week is the quote-unquote reciprocal tariffs from Donald Trump. Donald Trump said on Friday that spooked the markets that many countries next week are going to get reciprocal tariffs. This in theory sounds fair. I mean, if you tariff us and we tariff you, what's the big deal? Well, there won't be a big deal, in my opinion. Now, Europe is likely going to be the target for these reciprocal tariffs. Europe on Friday announced that they are going to lower the tariffs for U.S. electric vehicles, all vehicles. And that, to me, sounded just like a concession, like they're already trying to negotiate. So we'll see how that plays out. But Canada, Mexico, and China, I think, are the big ones. Europe is kind of more of a sideshow, as long as it's nothing too dramatic. But that is essentially why Tesla and broader markets sold off on Friday, was the tariff concerns that came out of Washington. Now, I'm just here to tell you, after the 1% sell-off on Friday in the S&P and the, again, over 4% sell-off in Tesla, we're going to have to see these tariffs really be negative for markets to continue to trade fearfully off of this. I think next week is going to be a lot more about the economic data if these tariffs are reciprocal on Europe. Now, to a certain extent, you could also tariff many other smaller countries that tariff the US, and Wall Street would just brush it off. So while there's a lot we don't know, I don't think it's going to be as bad as some people were fearful about on Friday. Now, first and foremost, before we start off this video with the news of the day today, the option activity of yesterday, and much more, a lot of accounts on X are now starting to talk more positively about Tesla. Real Blonde Broker on X says, if you're selling Tesla in the 350s instead of buying, my best guess is you'll be chasing soon. check its seasonality. Tom Nash says Tesla's negative sentiment plus the 6% drop make it very attractive right now at $370 per share. And we like to track the sentiment for Tesla here on this channel. And that's exactly it. Sentiment has been negative in Tesla for a long time now. At least it feels like over a month. Sentiment today is 44. So a little bit of an improvement from yesterday's sentiment of 30. Now, Elon Musk, in fact, has dropped some big news today. Elon Musk says that he doesn't want to buy TikTok in a new video interview. Right here.
What I do if I had TikTok. I mean, I guess I would look at the algorithm and try to decide, how harmful or useful is this algorithm, and what can we do to shift the algorithm to be more productive and ultimately be beneficial to humanity. We should just generally lean in the direction of something which is more beneficial than more harmful. I don't use TikTok personally, so I'm not that familiar with it. I've just seen, just see the videos occasionally appearing on X, or people show me something. But I'm not chomping at the bit to acquire TikTok. I don't know acquire companies in general. It's quite rare. The acquiring Twitter, now called X, was highly unusual. I usually build companies from scratch, and the reason I acquired Twitter, which is what I said at the time, which is that it was important to preserve freedom of speech in America and to the extent we are legally allowed to in the rest of the world. I felt like acquiring Twitter would be an important, productive step for the future of humanity. And even though it's really quite painful and has been very difficult, it was, I think, nonetheless important to do so. I don't know if the same logic applies to TikTok, but so I'm not I don't acquire things just for economic reasons, and so it's not clear to me what the purpose of acquiring TikTok would be apart from economics.
So let me translate that. Elon says that he could make a shit ton of money if he bought TikTok, but he doesn't see a purpose in buying TikTok. That he doesn't care about money, and there is essentially no value added if Elon buys TikTok versus someone else. So he's not going to buy TikTok. And while there has been a hangover from people thinking that Elon is going to buy TikTok, I mean, let's just be honest about this. If you ask people who's going to buy TikTok, they're going to say Elon. Like, that's just what has been out there. Like, here, let me ask my sister, who's going to buy TikTok?
Elon.
I mean, it's been going around for a long time now. And that has been a big drag on Tesla because last time, I mean, Elon sold a lot of Tesla stock to buy X, Twitter. Tesla hit $100 per share. Now, yes, there was other things going on at this time. Tesla deliveries were slowing. Tesla was heavily discounting their vehicles. Basically, every single day, you would wake up to a new headline and the stock would get hit. And then Elon was selling a bunch of Tesla on top of it. So I don't think these things are equal, okay, if Elon was going to buy TikTok, but it's confirmed he's not. And I think that in and of itself alleviates one of the headwinds that we've had for Tesla. Also in the news today, the first 4-hour duration battery energy storage system of its kind in the Netherlands is now operational. It's powered by Tesla's Megapack battery, a 10 megawatt hour, 40 megawatt hour system. FSD supervised V13.2.7 has started rolling out to some owners with AI4. Also known as Hardware 4. Porsche says they want to build more combustion engines. Porsche is planning extensive measures to, quote, strengthen the company's profitability in the short and medium term. That also includes expansion of the product portfolio to include additional vehicle models with combustion engines or plug-in hybrids. Lucid CEO Peter Rawlinson says he wants Lucid to be 20% car company and 80% tech supplier. Quote, the vision I have for Lucid is, just as there's an Intel inside your laptop, there's a Lucid inside a Honda or a Toyota. People think, oh, why don't you just be a supplier, Peter? Because we need the cars as we shop window for our product, he said. Lucid also plans to expand the reach of that shop window. It's targeting production of 1 million cars per year by the early 2030s, up from around 9,000 in 2024. And what was also in the news yesterday that I would imagine did not exactly benefit Tesla was that Trump has ordered states to halt EV charging programs. But again, is this something that is really helping Tesla? Is this helping to push people to buy EVs? I don't think so. I mean, in all reality, like if you're buying a Tesla, you're not charging at other charging stations 99% of the time. Despite the 4% fall in Tesla stock on Friday, option activity was actually quite positive. You had 319 different trades totaling $302 million with a positive order value of 68%. And even on Thursday, you had 550 different trades totaling $1.36 billion with a positive order value of 77%. And over the entirety of the last week, which it has been a rough week overall for Tesla, you had almost 2,000 different trades totaling $2.77 billion with a positive order value of 75%. So even though Tesla stock has been falling, it does look like hedge funds and institutions have been taking the opportunity to actually get some long duration exposure to Tesla. For an example, look at the June 18, 2026 option expiration, well over a year from now. You're looking at volume on Friday that was 91% calls and 9% puts. People seem to be pretty optimistic about the longer term potential of Tesla. Look at December 18, 2026. Volume on Friday, 88% calls, 12% puts. Those are pretty bullish numbers, okay? Same for 2027. You're looking at volume of 69% calls, 31% puts. I mean, people are, what seems like hedge funds and institutions, taking this opportunity to buy positions in Tesla stock and especially use options to get that additional leverage to do so. And I have to admit, after the stock has fallen so much in such a short amount of time, that does seem like a decent strategy, obviously getting a lot of time and all of that. But Tesla's already down about 26% from all-time highs. Like the more Tesla falls, the more bad news is essentially being priced into the stock. And I do think you could fall further from here. I want to be clear on that. I think the 100-day moving average, since you're now in this danger zone below 377, could definitely be in the cards, especially if this week is bad. But to fall below that, I think you're starting to stretch things a bit. I think that's really when Wall Street gets, disconnected from the reality of what Tesla is doing this year. In this upcoming week, you are going to have some earnings. Now, I think you want to just pay attention to these specific sectors. A lot of food companies, healthcare, health insurance names, some oil names will report, a lot of software and a lot of tech this week. Some more mid-cap, smaller cap companies, but some larger names as well. Monday morning, you will get McDonald's. Tuesday, Shopify, Coca-Cola, Humana, BP, and others, Marriott included. Tuesday, Supermicro, Upstart, DoorDash, Lyft, Gilead, and others. Wednesday, Vertiv, CVS Health, Barrick, Generac, Biogen, Kraft Heinz, and others. Wednesday, after hours, Reddit, Apple Oven, Robinhood, Dutch Bros, Albert Marley, The Trade Desk, Cisco, and MGM Resorts. Thursday pre-market, Datadog, CyberArk, John Deere, Crocs, Sony, and GE Healthcare. Thursday, Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. And then Friday, you will get Moderna and some other names. So earnings season, it's not going to pack the same punch as your multi-trillion-dollar names for the broader markets, but it definitely will be important for their specific sectors. Now, if we take a look at the economic data that we're going to get this upcoming week. That is the big story, okay, for markets. On Monday, you will get consumer inflation expectations, expecting those to be 3.1%. Hopefully, it's a little bit less partisan of a survey, because we see in the Michigan Consumer Sentiment Survey on Friday was really just Democrats that skewed all of the numbers there. It's not really an accurate representation of inflation expectations. I think generally people expect inflation to come down. Now, another big catalyst this week will be Fed Jerome Powell that will testify in front of the Senate. Sometimes we get headlines out of that moves markets. Sometimes we don't. So it will be interesting. And if we are going to get headlines that'll move the markets, it'll be on the first day. So it'll be on Tuesday versus on Wednesday when Powell speaks again. Now, on Wednesday as well at 8:30 in the morning, you will get core CPI month over month, expecting 0.3%. Year over year CPI expected at 3.1%. Headline inflation expected at 0.3% month over month. And year over year expected at 2.9%. I actually think these numbers are too high. I think we're going to come in lower than expected. And that's going to be the biggest catalyst this week for stocks. If inflation comes in on the low side, then I think a lot of the concerns that Wall Street has right now can somewhat be elevated. And as Kathy Wood said on Friday, I think we will see a broadening of our markets as inflation comes down, as Doge really makes progress on that, as 10-year Treasury yields come down. You're going to see a broader market rally, and that's going to be good for risk on assets, including Tesla. Now, Thursday, you'll get PPI month over month, expecting 0.2%, initial jobless claims, total household debt, and other smaller data sets. But again, I think, from Wednesday, Thursday, Friday, I think markets are probably going to be trading mostly on that CPI report. Now, Friday, you're going to get retail sales month over month, and this will be important to judge the economy. You're expecting 0%, which we've heard a lot of negative commentary from consumer companies in January. A lot of people are talking about this Christmas, December hangover that's kind of slowing down sales for January. If that is true on a larger basis, then retail sales could actually come in negative, which short term could be a positive for the markets. It could help bring down those 10-year Treasury yields and cause at least what could be shorter term rally for markets. Now, you will also get export prices, import prices month over month, export prices and import prices year over year, industrial production, capacity utilization, manufacturing production month over month and year over year, as well as business inventories. Those are obviously, again, sub-tier, second-tier data points, whatever you want to call them. So retail sales is going to be the bigger catalyst for Friday. Carson Investment Research and Ryan Dietrich on X say, while it is not advisable to invest solely based on who wins the Super Bowl, it's interesting to note that since 2004, AFC Super Bowl victories have been associated with positive stock market returns in 12 of 13 years, okay? So basically, if the Chiefs win, the stock market's going to do well. If the Eagles win, yeah, that's not so great for apparently stocks. You can see apparently Ryan Dietrich wrote in a post that personally he cannot stand either team, but I guess I'll just say when Philly wins a Super Bowl or World Series, really bad things tend to happen. Philadelphia ethics, the World Series, 1910, panic of 1910 and 11, 25% bear market, 1911, 12 months in recession, 1913, another recession, the eve of World War I, crash of 1929 and the Great Depression, World Series, they won all, during those years. Phillies for the World Series, double dip recession of the early 1980s, and the final crisis and the Great Recession in 2008. And then the Eagles won the Super Bowl in 2018, which was the worst year for stocks since 2008. So it is fascinating. You can see when the Chiefs do win the Super Bowl, or other teams for that matter, in recent years it has been the Chiefs, you have some exceptional stock market returns. And an average return here would probably be in the 20% range. You could see a 23.5% year here in 2009, 29.6% in 2013, a 19.4% return in 2017, 28.9% return in 2019, 16.3% return in 2020, 24.2% return in 2023, and a 23.3% return in 2024. So this could actually be something Wall Street pays attention to. I don't know how much it's going to like move the markets, but it's definitely something that you will hear people talking about. I do believe overall, when you look at the CNN Fear and Greed Index, you're sitting in fear at 39 today. The percent of stocks trading above their 50-day moving average is at 46.5%. So more than half of our markets are currently in a downtrend. And when you look at the AI Investor Sentiment Survey, this is the highest level in the past year of individuals that feel bearish. Like when you add all of this together, I think you are, ripe, if you will, vulnerable, if you will, for a, broader stock market rally, for stocks to actually get better from here than get worse. Because normally when sentiment is bearish, is when things get better. Normally when sentiment is too bullish is when things die down a little bit, to some degree get worse. So I think the big catalyst again is Powell this week and, inflation. And as long as those things are not worse than we expect, which I don't think they will be, I think Tesla will have a great week. And I think the markets will likely have a good week as well. Add on top of that, if the Chiefs win the Super Bowl, again, I don't like both those teams. I live in Michigan. I was rooting for the Lions, although 5 interceptions in a playoff game is never going to get you to the Super Bowl. I don't care who wins nonetheless. So let me know what you guys think about all of this information down below in the comment section. If we do have a good week for Tesla, I would be targeting these moving averages to the upside of around $400 per share, which at this point would be 63% upside from here, which, it actually sounds like a lot just to get back to $400. But that does coincide with roughly your 50 and your 20-day moving averages. If things get worse in this upcoming week, you're going to be targeting that 100-day moving average at about $333 per share. So, ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.